All right, what's up everyone? Good afternoon. Welcome back to the Trade Buddy recap webinar. Today is Wednesday, October 19th, and we're going to be covering two trades I took today. One was a small loser slash break even, whatever you want to call it, and one so far is a winner. I have locked in some partials and I am looking to swing the rest overnight. So those two stocks are COMS is the one that I am still currently holding. And then KTRA is the other one that I took in the morning and ended up not holding up the plan, and I sold into the break-even retest. So they're two kind of similar setups, I guess. Not 100% similar. One is like a day two retest and one is just the first green day with news. But they both kind of, just revolve around those key levels, the key ideas of using levels to plan a trade. We're also going to be talking about some of the stocks like AMPX. While I didn't see a way to really trade AMPX, I just want to talk about that fact for a sec, because this did do a, big move, but there isn't always a way to trade stuff. So you have to be okay with not getting involved if you don't have a setup. But let's just first kick off and cover the two that I did trade. And we'll just start off with KTRA. So KTRA, this was on the watch list this morning. And this was mainly a stock I was looking at because of how the after hour and pre-market chart looked on Thinkorswim. So here's a screenshot of that. So you can see, zoom this out a tiny bit. So you can see late last night in after hours and early this morning, it kind of did this big run up and it hit resistance at like 14.5 cents. And that was a daily chart level. We'll look at that in a second. So that, was some type of previous resistance that was showing. And then it consolidated. And then once 4 a.m. hit, where normal traders can actually trade in pre-market, was able to spike up even higher into 18 cents. So this to me kind of looked like an example of just a pre-market high retest as new support. Now, I know if you just use the terminology there, it wouldn't really make sense because, technically the pre-market high is up here near 19 cents, but just the way that it looks, because it just had that spike up in extended hours, hit that resistance, it pulled back and then broke out higher. That kind of made that formation that I wanted to see. And I said, hey, you know what? Maybe we can see this just pull back and hold $14 as support. And if it can do that, then we can definitely see it go on a nice morning run. And when we were planning this in pre-market, the next level of support lower to risk off of was right near 12.45. So the risk, if you just use percentages, yeah, it's 10-15%. But of course, that's why, we use that trade planner calculator just to make sure that we don't oversize in our trades. Now, one last thing I want to say about this is that this is more of a day trade, right? It's day one. Even though technically, yes, it started out late yesterday in after hours, with all the context of this just happening within one extended hours session, it's like you treat this in a way that it's a day trade, not like a multi-day runner. So with that in mind, right, you want to mainly use 5-minute levels, not so much the hourly chart. So KTRA, like I said, let me just mark off some of those levels real quick. The daily chart level was at 14.5. Next level up, see up near 16 or so, 16, 17. Then there's another one kind of near 1750. And then the main big one is all the way up at 24. So those are our levels that we're working with. And like I said, I was looking for it to hold that 14.5 area. And you can see the first candle, it overall did hold. So I started buying a position into this. Like I said, the way I planned this was as long as it can hold 14.5 as support, I'm going to try to sell my first position right up into the first intraday high at 18 cents. And if it cannot hold 14.5, then I will try to sell back into break even. But if it just collapses and falls apart, then I'll just have a hard stop set on the break below the 12 support. And so you can see here on the 5-minute, it's like very clear what happened. Yes, it tried to hold support in the morning, but then it quickly broke down, right? Quickly broke down. There's a full red candle. That's a very, very clear sign that it's not holding that support. And because this was just a day trade, right? It's not like a multi-day swinger. And realistically, if you look at it from a volume perspective, like this whole move happened in after hours where the volume really wasn't there. So there's not that many traders who are going to be reacting to that price from yesterday after hours, right? Because usually we use this as like an idea of there being like short sellers who are trapped. But if you look at the volume yesterday, it's almost very insignificant. Like one of the largest candles only had 62,000 shares traded, where this morning when it was testing, it had, like 2 million shares traded. So the volume back here isn't really that significant, which kind of makes the price action that happened here just indirectly not as like supportive for the move. So that's why I was able to quickly just break through. But even though regardless of that, I still wanted just to take the risk because you never know. Maybe there were other traders who saw the same thing and they were looking to buy that same 14 level and they could have supported it, but it didn't, right? It's all about just taking that risk and calculating the risk beforehand. So anyways, it broke down. And then, once that breakdown happened, you can see it very clearly on the 5-minute chart. The main goal from there was, okay, this trade has failed. I know it's not working. So now my two options are either to try to sell back into break even, or if that doesn't happen, then I take my max loss. And, thankfully on this one, it was able to bounce back pretty easily. And I just got out of it pretty quickly. It gave a few different times to exit. So even if you were hesitant on the first exit for some reason, right here, there was still like 3 more bounces that, just rejected that area before actually falling lower and breaking that 12 support. So just one of those trades where, you take the risk, doesn't work out, but because we know how to sell back into the break even, it's overall a very, very low risk trade to take with some decent return if it does work, right? Because for me, it's not about win rate. It's just about, what's my risk to reward ratio. And with trades like this, I can, have a very small risk end of the day. And, the ones that do work, they tend to run fairly good. So that's kind of KTRA, like I said, just as like a standard day trade, nothing too crazy. Now, the one that I took kind of at the same exact time was COMS. So COMS, we talked about this one yesterday in the trade recap, and this was a very big spike. Now, if you notice with these past two stocks, right now the small cap market is really favoring these sub-dollar plays. It's just what the market's going for. It's just what traders are kind of fixated on. And COMS, it ran from like 6 cents all the way to 16 cents in this afternoon spike, right? Very big move. And if you recall from the recap we had yesterday, there was really no way to trade this. Like there was no real setup for me personally. Like the only one that you could have maybe traded was if you wanted to jump into the breakout and you had this mini like micro pullback, just retesting. Well, not really retesting, but like it's like it broke out and now it's continuing the breakout off of that 9.3 level. That was like the only way you could have traded it if you wanted to. But for me, it was just like, I don't like buying breakouts, right? Like I like buying dips into previous resistance as new support. So all day yesterday, there really wasn't too much for me to trade. But we looked at it this morning and we saw, hey, you know what? Like this morning, it was able to hold pretty high. It closed into the highs, and we still haven't retested that area. So technically, that previous resistance can still act as support. So it was definitely a potential trade. Now, one little caveat with this thing, right? It's now a multi-day mover. This is day one, going into day two. So typically with these multi-day movers, I like to use more of like the hourly chart because it just kind of gives you a bigger range of support. And, you know, because it's now moving in multiple days, there's so much time, there's so much data that using the hourly chart makes it a bit easier to read the full price action. So here is a screenshot of the hourly chart from Thinkorswim this morning. And this is kind of what we were looking at. You can see, usually when I use the hourly chart, the main thing I use is just a line chart when it comes to marking off levels. And you can see that yesterday, the main resistance from pre-market was right at like 0.867, was that hourly line chart level. And after that breakout happened, it ran all the way to like 14.8 cents on the hourly line chart. And like I said, we still haven't seen that previous resistance retest as new support, so it still could. So the way I planned this trade was, okay, I'm going to look for that dip buy, just using that kind of 9-cent area as support. My max loss for this trade is always the next level of support lower, and in this case, that is 0.725. Now, instead of just having my first target all the way up at 14.8, we do see this very, very big, level here that not only was it a level on the hourly chart as like a support level, but it's also this daily chart line. So it's a pretty significant level. And so because of that, that was enough reason for me to want to sell some profits into that, like if it could get there. And then of course, hold the rest as long as it holds support, looking for that hit in the 14.8, 15 cent area. And so if you look at how it played out this morning, it pretty much, played out overall as planned. You can see that there was a bit of morning volatility here. It did pull back as low as 0.83, pulled back as low as 0.85, so really not that far. Like I said, the level from the hourly chart that we had was at 0.867. So if I just draw that, like obviously it's not going to show here on Thinkorswim or on E-Trade, but 0.867 is pretty close to 0.85. Pretty close. Now I didn't get a perfect entry on this though. I did end up choosing to kind of size into it more above 9 cents. It just the way that like my orders went and my fills went. But overall, the main plan, the main setup was there. And also because this is a multi-day mover, the main candle I'm looking at market open is the hourly candle. Only thing I want to see is I just want to see the hourly chart candle hold and close above my thesis line. As long as that happens, then the trade's valid. And like I said, the first target I had was just those levels of support from the hourly chart right here, right near 1176. So I'll mark off where that is, kind of like right around there. So we saw that this was able to go on a nice little morning spike, spiked up, it broke through VWAP, and then I just had a limit sell waiting right up in that line, and I got filled. From there, right, next target is obviously the previous high of day, up near 15 cents, but we have to kind of take a step back, right? Because overall, you look at the big picture here. We still haven't made a failed breakout. We still haven't broken support. So the reason why I lock in those first partials into that level is so I'm willing like to just hold it on a pullback all the way down, right? Because imagine you're long this thing at 9 cents. You hold through this whole bounce into 12.5. Maybe you're targeting a huge move into 15 cents. And then it starts pulling back and you see those profits slip away. The more that you see those profits slip away and you didn't lock in any into that like an initial spike, you're going to be more and more concerned, more and more compelled to maybe lock in the small green profits because you don't want to miss out on those profits. But that's, you know, dangerous to do because the main reason why you got into the trade in the first place wasn't just really expecting that morning spike, but it's more so just saying, hey, if it can hold 9 cents, if it can hold 8.50, then the chart is still good. And now you're looking to sell because it's now back down to 10 cents. Well, it held the main level, and who's to say it's not going to hold the main level again, right? So the whole idea, you take those partial profits, which gives you the patience to let the whole stock do its thing, right? They're called patience partials. That's why we do it. That's the whole idea. So because I locked in some partials here and I already paid myself on this trade, now I'm okay with letting it pull back. And as long as it holds support, I'm going to stay in it. Now, don't get me wrong. There's no guarantee it's going to bounce from here, right? Like we could definitely see this thing break on down and then the trades fails. But you have to give yourself that time to let the stock do its thing. So we'll see. I'm going to swing this into tomorrow. And overall, the plan is as long as it holds that level near 8.5, 8.6, then it's 100% bullish to me. And from the bigger picture, right, we do have a nice large green candle on the first day. Not that good today, but it still is kind of making higher lows. So we'll see what happens. So yeah, those are the main two small caps that I got involved with today. Overall, kind of the same setup, right? One worked, one didn't. You could definitely make an argument that the setup on COMS was more of like an A+, whereas KTRA is like maybe a B. The main thing I don't like that much about KTRA is that fact that like this previous resistance and then the further breakout all happened in like extended hours where the volume wasn't that big. So there just isn't the ability like to say, oh, whoever sold here at 14 is now underwater. Cause like there's like 3 guys that probably sold here. There's almost no volume. So that kind of thesis isn't that strong. Whereas on COMS, using that thesis of like, okay, well, like whoever sold here and below at 9 cents is still underwater. And you know, there's a lot of volume all throughout the day. So there's a lot of potential traders who sold here who are now going to want to buy back in when it gets back to their price. So this is a bit better. Like I said, we have no idea whether or not this is going to actually move up. However, you know, we'll see what happens. There really is only one other stock that kind of not really catches my attention, but made a notable move today. And I think that is AMPX. You can see from the scanner, this thing was just blowing up into the close. Had a lot of hits on it, hitting highs of like $11 per share. Nice overall move. Like I can definitely look at this and say, yeah, I mean, there was nice kind of consolidation of this range here in the high 7s. You could also draw like some sort of triangle here, right? It's not usually what I do, but you can see that kind of development, right? Has the higher lows, lower highs, it's kind of pinching it down. And then once that triangle breaks, you see massive volume come in. Obviously, traders did use this pattern to buy it. I'm not saying it's a bad pattern to buy. It's just not one that I personally buy. For me, ideally, what would have happened is if this level of support was just a level from like maybe the hourly chart, maybe the daily chart. But I looked at it and it wasn't. You could also say this is like a big ABCD, right? It's almost the same thing. Or like this is A, this is B, what, C, high or low, and then D, the breakout. They're all kind of the same thing, right? Triangle, higher lows, lower highs, ABCD setup, all kind of leads to the same thing. Well, like I said, this for me didn't really fit any strategy. Because if you look at the daily chart, this is one of those recent IPO stocks. And the only real level this has, like as far as a very obvious level, is up at 1294. Now there is a level down here. Let me see. Maybe I did miss this thing. Because I did just notice there is that kind of lower line for that 748. It came pretty damn close. Actually, it did tap it. Okay, so maybe this was a missed play somewhat. Although I don't think it showed up on my scanner that early because I didn't notice it until the afternoon. Let me double check my scanner. Yeah, I guess there was a setup to trade here, right? Because like I said, I don't really like to buy these kind of volume breakouts. I used to back in the day, but then I figured out I can actually get into these earlier by just finding a support level and buying into that. So in the case of AMPX, the only real support level there was during that morning spike was right there at like 748. Because you can see there's also a level up here at 885. But I'm pretty sure that was like the top resistance before it broke out further. Yeah, so like the morning spike happened, it ran up and it rejected 850. So like overall, it's seeing resistance near that top resistance from the daily chart. So all you can really expect is that it's going to pull back and try to hold that lower support. Because if it's respecting the resistance from the daily chart, then there's a good chance it's going to respect support from the daily chart too. Yeah, you'd want to get into that dip. Here in this case, you would have to buy a bit higher because it didn't pull back exactly to the line, but overall it did hold it. Now, if you did take this trade, the one main thing is that, because this is like a very kind of fresh move, there's no real levels to plan risk off of. So if you just wanted to base the risk off of the chart levels 100%, then you'd probably have to say that like the max loss level is all the way down below 672. Now it's not that far in terms of dollar per share, but if you plug those numbers into the trade planner, then you would be kind of limited on your size. But you don't have to size in massively to every single trade, right? You don't really want to. So that's not that big of a deal. And then of course, when you're planning this thing, you don't know it's going to turn into that larger ABCD setup. So your first target would be 846. Now that's the first target. Now I want to make it clear. You might be looking at this and saying, well, that risk reward doesn't make any sense because now you're risking 11% to make 13%. It's like barely 1-to-1 risk reward. But keep in mind that most of our trades don't hit the max loss because the main idea is that if it does break down through the main thesis level, you always try to sell back for break even. And that happens a lot, right? We have a lot of trades where you can sell into the break even and only like 15 to 20% of trades actually hit the max loss. The actual risk reward is a lot closer to like, break even. And of course, for the reward side, this is just the first profit target. You don't sell the whole thing there, right? It's just the first partial. And then if it can break out, you hold the rest and target those higher levels of resistance from the daily chart. You can't really calculate risk reward on a per trade basis. You more so calculate those numbers from trading a specific strategy and collecting data of all those trades you've taken with that strategy, and then calculating, okay, how much did you win on average? how much did you lose on average, and that's the strategy's risk to reward. Okay, it takes a lot more work than just looking at one trade, one stock, saying, okay, here on this trade, the risk reward is X. Because with how I trade, it doesn't really work that simply. If we did take this trade, and once again we didn't, I just want to kind of just walk through the steps of how you would execute this. You would have a limit sell waiting at 840s, lock in your first partial, and then here, like, I really wouldn't consider this to be a failed breakout. It's just kind of testing resistance. So it's that same idea that we talked about on COMS. The reason why you take those first partials is so you're okay with it pulling back and you don't just panic sell and try to lock in your small green gains. And so you can see it pulled back, but the main idea you have at this point is, all right, it's fine. I have locked in profits already. And I know that my main plan is, as long as it can hold 750 as support, it is 100% bullish and it can break out. You just kind of sit back and wait. Eventually, kind of stabilized, and then it exploded, right? It went massive. And then, of course, now it's a breakout. So after this breakout occurs, now your next level of thesis is, as long as it can hold 850, it's 100% bullish. How are those levels marked off from the daily chart? Hopefully lock in some partials into ones that hit. But if you don't get any of that hit, then you just say, all right, you know what? Now, as long as it holds 850, it's 100% bullish, and you just keep kind of letting it do its thing. That's how you can hold these winning trades for those massive returns. And that's what pays off the fact that, you know, lots of trades are kind of break even. You have some that hit the max loss, but the ones that do win, you know how to hold them for those massive moves. And that's what, you know, pays the bills at the end of the day. So yeah, I mean, this was a decent set. Like I said, I didn't see this on my scanner. I noticed it at the close. Oh, my scan's all messed up. But yeah, it didn't really show up. I'm not sure what the catalyst was. I'm gonna double check real quick. They were among the first funding recipients from the Biden admin's bipartisan infrastructure law. That's really big news. They deal with lithium-ion batteries. So yeah, very, very, very strong news. No surprise why it happened to explode. But one more thing that I want to point out, that the news came out right here, and that's what brought the volume in. So if you were just trading based off the news alone, you wouldn't know about this stock until it's already breaking out. So you can't really just rely on news for this type of trade. This move up happened before then. I still kind of stand by what I said. Technically, as long as it holds 850, it's 100% bullish. So tomorrow, if we somehow see some type of pullback and this thing drops down, I would be interested in that 850 level. And because it would be now a multi-day mover, you can see that 850 line is around the same area. We do have a daily chart, or not daily, we have a nice hourly chart back there too. So you could almost make a range, right? It'd say that, you know, the area it should hold is between 869 and 840. And then with that trade, your next level of support lower is down at 807. So the risk is a bit tighter there. So yeah, that will be one of the trades that I will keep on watch for tomorrow. And that is pretty much everything, right? So hopefully some good lessons, lots of focus on small caps right now. If you have any questions and you're watching the recording of this, then feel free to send me a DM. Make sure to recap your own trades as well, right? If anything, just upload your data to TraderView, EdgeWonk, TraderSync, whatever you use. Ask yourself objectively if you traded correctly today, if you did trade. Did you plan your trades beforehand? Did you use the trade planner to calculate your size? Did you follow those rules that you have for yourself of locking in partials, of accepting when a trade fails and selling for break even? Be objective with yourself, because at the end of the day in the market, you are your biggest enemy. So you have to kind of fight with yourself and, you know, figure out like how you make mistakes in trading I'm going to make rules of how to fix those mistakes and keep them from happening. Okay. So make sure that you do some work yourself too. But with that being said, going to wrap it up here. Thank you all so much once again, and I'll catch you tomorrow.